Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Joe Tigay, Portfolio Manager over Equity Armor Investments. We're going to take a look at trends in the Nasdaq-100, the Nasdaq Volatility Index, of course, vol-Q, and we'll also look at correlations as it's playing out in the bond market. Joe, it's great to see you. Welcome back to Trade Talks.
Thanks for having me today.
All right, Joe. So we've seen an uptrend in the Nasdaq-100, sort of breaking that today. What are we looking at over there?
Yeah, so we're talking about correlations. Really, the script has been flipped today. The past month or so, we've been seeing when the bonds go up, so does the Nasdaq, and value is really lagging. Today, we're actually seeing the opposite. Bonds are going down, and bonds are going up again today. Yields are coming down, and we're not seeing the same story in the Nasdaq. So what really is going on under the surface? And it's almost like the psychology has shifted. Powell is on the Hill. He's testifying. He thinks that rates are going to stay lower for longer. And historically, the market has interpreted that as, oh, great, low rates means future growth. Today, it seems like the market is interpreting low rates means bad news for the economy. So it's almost like bad news is good news was the story before. Today, it seems like bad news is bad news, which is really interesting to see why that's playing out and how that's happening. However, it's the fact that the banks and value are not getting sold off the way that tech is still keeping volatility suppressed. Until we see a day where banks and tech get sold off at the same time, we won't really see volatility spiral out of control, and the market will remain hung in there.
Joe, do you think at some point yields, when it's too low, could almost be bad news? In fact, does that signal that perhaps growth has peaked or we're not seeing as much growth on the horizon?
Yeah, I mean, the concern out there, of course, is that we're already at the peak growth for this economic cycle, and we'll be lagging the rest. And so what happens next? And with rates so low, we can't go any lower. All we can do is really push down future expectations for rates to go higher. So yes, that can be, it really is psychological at some point, though. The market just has to decide, oh, lower rates is good for equities, or lower rates is bad because the economy is bad. So that's just really a question. And at some point, there's kind of a shift back and forth, which narrative is winning at any given day.
All right, Joe, we haven't spoken about EA vol in a while. Let's take a look at that. Volatility has been relatively tempered over the past couple of weeks. Anything in the portfolio of note?
Yeah, so this continues to be a spot where we're looking at accumulating volatility. Of course, anytime you get volatility on the lower end of its range, it's where you want to do that. And as an asset class, and using volatility futures, it can be traded as an asset class. When it's low, it's a time for it to accumulate it. We have to remember, though, as an asset class, this isn't like other asset classes. It's not a buy and hold asset class. It's a tradable asset class where we have to buy it when it's low. And on days like today, when it's rising, it's time to lessen it out a little bit and really waiting for a really big pop, and then we'll really unload, and obviously using those proceeds to go out and buy more equities lower.
All right, Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.